This is the, so we want to look at the situation where the budget or the provision for doubtful debts is increasing. A very good example is set before us. That his financial year ends on 31st December. And on 31st December 2024, he created a provision for doubtful debt of 1,000. Okay. 2024, the end of the year, the provision for doubtful debt was $1,000. So during the year ended 31st December 2025, he wrote off the bad debt totaling up to $990. That is in the following year. The following year, the bad debt was totaling up to $990. Previously, it was 1,000. Now it is totaling up to $990. The other year in 2025. And again, we are told that on 31st December, just a minute. Just a minute, very quick one. Right. So, all right, sorry for that. We continue. We are saying that this person's financial year ends on 31st December, and on 31st December 2024, the provision for doubtful debt totaled to 1,000. I had written off that, and during the year that ended in 2025, 31st December, he wrote off the bad debt that totaled to 990. Meanwhile, the last year it was 1,000. Now in 2025 it is 990. So on 31st December 2025, the trade receivables amounted to $28,000. He decided to maintain the provision for doubtful debts at the rate of 4% of the trade receivables. 4%, that's the trade receivable in 2025. Okay. Write up the budget and the provision for doubtful debt account. Then prepare the extract of the income statement and the balance sheet. So you need to write a bad debt account. I told you that every time we have got the body date that has been written off, you have this 990 was a bad date. It wasn't the provision for the bad date. So the bad date that was written off, it was 990. So you debit the bad date account every time you write off bad date. Okay, it is debited with that amount. After debiting it, you have to you have to close up the account. You have to close the account. Right. So after you have closed the account, then it is necessary for you to balance off the account. And as you balance the account off, then it is nice and very important that the balance, you take it to the income statement. That's as we said last time. Now, for the provision for doubtful debt that you're preparing is actually for the year that ended in 2025. That's after 2 years. So do for 2024. In 2024, the provision for doubtful debt that you had, I told you every time you incur the provision for doubtful debt, you credit the provision for doubtful debt account with the income statement so that you can debit the income statement again with the very amount. So there is this 1,000. And after you have just done that, we know that in the year 2025, the the account that you had, you made the doubtful debt of the provision for doubtful debt was 4% of 28,000. So you do 4% of $28,000 times 4%. Okay. So you see that the provision for doubtful debt will be 1,120. But see, you have to deduct the 1,000 from the previous period so that you can just write the increase only, which is the increase of 120. That's the difference that you write. The difference of 120 for 2025. That's the only provision for doubtful debt that is attributed to the to the year 2025. And then from there, you can easily close the account by balancing it off. You can balance off the account, okay? Balance it off the account. Then as you balance off the account, you can have the credit side of the account. When you're balancing off the account, what we said is that you have to total up both sides and record the biggest amount on both of the sides. Okay. Right. You can balance off the account on both sides. Then after you do that, then there is a balance brought down. You can bring it down on the other end. Yeah. Can you bring it down on the other end? Okay. So the balance brought the balance when you write the biggest amount on both sides, then the balance carried down will be generated on the lesser side of the account, and then write it on the opposite side with the date of the next month, which is now 1st January 2026. And so this is the total balance of provision for doubtful debt for 2020, for the following year. That's what we're going to bring down. Okay. So it is that easy. So the message that we are communicating to you is that you have to make sure that whenever you have, for example, you have the provision for doubtful debt in 2024, that is 1,000. Then when you calculate next year for 2025, the accumulated one, you get maybe 1,500. Just know that this 1,500 is inclusive of the 1,000. So you have to deduct it so that you can remain with only the difference. It is only the difference that you write as the provision for doubtful debt for that year under concern. Right. So now, how can you show the extract of the same on the income statement? You and I know that the provision for doubtful debt is actually debited when you go to the income statement as an expense. Both bad debt and the expense for bad debt, they are also debited in the income statement. Yeah, so you just show that extract. It's an extract that you are showing. So indicate that this is an expense in the income statement. And on the balance sheet, the provision for doubtful debt, like the total, the cumulative one, okay, is deducted from the total receivables. And this is what we are doing. Then the difference is actually what we do right now. So the amount of the provision for doubtful debts of 31st December 2025 is actually deducted from the trade receivables to show the amount expected to be received. So when you do the reduction, you reduce the provision for doubtful debts, then Sachin's financial year, what I'm trying to say that now we have covered the concept of increasing bad debt. But what about the concept of reducing provision for doubtful debt? So this is how you go about it. Okay, let's pick an example. We're going to pick an example so that you understand what happens. I told you when it is increasing, you deduct, right? When it is increasing, you deduct. But now, this is what happens. Sachin's financial year ends on 31st December. And on 31st December 2015, Sachin's provision for doubtful debts amounted to $1,120. That is in 2025. Okay. The provision for doubtful debt amounted to that, to $1,120. On 31st, yeah. So we are saying that on 31st December 2016, the trade receivables amounted to 24,000. The person decided to maintain the provision for doubtful debts at the rate of what? 4% of the trade receivables. So this is the rate at which the person maintained. That is in the other year. 4% of 24,000. Can you write up, the provision for doubtful debts account? So very easy for this one. So you and I know that from the previous period, we have the total of what? $1,120 from 2024. Can you do the 4% of 24,000 so that we can get for 2020? Oh, this is 2025, sorry. Then for 2026, what will be the provision for doubtful debt? Do 4% of, of 24,000. What is 4% of 24,000? Anybody who can calculate and give it? You guys, 0.04 times 24,000. What do you get? Hello, what is it that you get? Hello, how much do you get? Zaid, what do you find?
1 minute.
Okay.
So what are we calculating again?
4% of 24,000.
Five seven
5760. That's what you found.
Yes, sir.
5,760. Okay. Assuming that is true. You did 0.04 times 24,000. Right?
No, sir, I did 24,000 times 4%.
That's the same thing I'm saying. 0.04 times 24,000. Do that again.
It's giving me 960, sir.
So you get 960. So have you seen that the provision for doubtful debt has reduced, right? It was 1,120. It is now 960. 1,120 is now 900 and what? And 60. Okay. 1,120. It is now 960. Okay. So what do you find? What is the difference? We want to see the deduction, right? We want to see the difference. What's the difference? Just deduct these two. 1,120 minus 960. What is the difference?
$160.
160. So if you look at this 160 now, it's a deduction. So instead of crediting it, the way how we were doing last time, we would debit it in the provisions for the provision for doubtful debt account. It will be debited, so that when you go to the income statement, it can be credited. Remember, in the income statement, all gains, they are credited, including the reduction in the provision for doubtful debt. The reduction in the provision for doubtful debt is a gain. For that reason, it has to be deducted. So it has to be credited in the statement. So now observe how you make the entries. This is how you make the entries. Okay. In the provision for doubtful debt, this is how it would sit. I told you that number one, you have the balance brought down from the previous period, that is in 2026, in the previous period. Then after you have that particular amount, then of course you need to enter. You have to enter the amount, that difference, okay? For 2026, at the closing of the period, there was that difference, the 160. I told you it's a deduction. So since it was a reduction, you debit it with the income statement, okay? You have to debit it. Yeah. But if it was an increase like that other one, you could have credited it. That's what we did previously. So now you debit it. And after debiting it, what do? You balance off the account. There is now. What you need is to balance off the account, okay? Record on both sides the biggest amount, then you see the balance carried down will be 906. And the same one will be brought down, in the following year, that is 2027, 1st January. Okay. Just to re-echo, the new provision has been calculated as 4% of 24,000. That is what we said. Now, how do you show this in the income statement? We told you that since now this one is an income, it's a deduction in the allowance for receivable. Just after gross profit, there is a part where you add these values. The reduction in the provision for doubtful debt is 106. So you have to add that basically. So this is what. So the surplus provision is added to the gross profit if the income and any bad debts would be included in the expenses and in the income statement in the usual way. So that's what usually happens. So now observe clearly that we have an extract from the balance sheet, and you and I know that the provision for doubtful debt being 160 has to actually be inclusive, or has to be added in the total provision for doubtful debt for the closing of the period. And we know that the provision for doubtful debt is deducted from the total receivables. Our total receivables being 24,000 minus the total provision for doubtful debt for the year ended in 31st December 2026 was 920. And so when you deduct 24,000 minus 960 gives you $23,040. So that is going to be your amount that you record. So this is how you communicate these two, okay? So I've showed you the scenario where the provision for doubtful debt is increasing. I've shown you how to record, and the situation where the provision for doubtful debt is decreasing, and that we have also indicated to you. So it is just some simple work.